So whenever you do an option selling system, if market moves zigzag, it tends to hit your stop loss easily and we end up in loss. Is there a way to handle this overall zigzag movement in the markets through any other strategy? That is what we are going to see in this video. Most people use a strategy called rolling straddle in order to handle these kind of volatile move. What they do is they short at the money call option and at the money put option at a specified time, and they track the overall underlying movement. If the underlying moves X percentage, then they close this both the options and they initiate a new straddle. And you cannot keep doing this rolling over of straddle forever. So that is why you have to restrict this overall straddle to n number of times, beyond which it might not be profitable. So the rules of this strategy is to initiate a straddle at specific time and keep closing it and initiate a new straddle upon a certain percentage of movement happens in the index. If we do this, what would be the overall results looks like? So we will apply this strategy in all 5 instruments: Nifty, Bank Nifty, Fin Nifty, Sensex and Mid Cap, and we will see how the overall returns would looks like. And I would recommend this strategy to run it only on specific expiry days. Do not run this strategy on all days. It might not be profitable enough because the options doesn't decay easily on other days. But on expiry days, it can tend to expire much. So let's check the overall results of the strategy. So here's the rules of the strategy where I've selected Bank Nifty and I've selected 10:30. So we are leaving the first 1 hour so that the volatility will go down. So from 10:30 to 3:10 is the overall timing, where we have selected at the money call option and put option, and we have selected the stop loss on the basis of underlying. If the underlying makes a movement of more than 0.4%, then we will close both the legs, where I have given stop loss as complete, where we will close both call option and put option if the underlying moves 0.4% on the upside or on the downside. And we will give 3 re-entries. So in case what happens, you start here and market moves 0.4%, then you will close both the legs and initiate a new straddle. If the market comes down 0.4%, from there again you close the previous leg and initiate a new straddle. So likewise 3 new re-entries have been considered. So if we consider this and then apply these rules to all instruments, not only to Bank Nifty, Fin Nifty, Nifty, Sensex and Mid Cap, what would be the overall results looks like? Let us see. So let us consider this example. Consider Bank Nifty is at 52,000 and our stop loss is 0.4% on the underlying. So at 10:30 you are checking where the Bank Nifty is at. So it is at this level 52,000 to overall 52,000, and from there if it moves 0.4%, which is 208 points. So on the upside, if Bank Nifty moves to 52,208, or on the downside if it goes below 51,792, then we are closing the straddle. So initially we would have shorted 52,000 straddle, call option and put option. If it reaches any of these level, then we will close our old straddle and initiate a new straddle. For an example, if it goes to this level 52,208, where it goes 0.4% on the upside, then we will close this straddle 52,000 and initiate a new straddle which is 52,200 call and put, and we'll continue to hold it. And again you check from there, if it goes 0.4% from here, what would be the overall level. So which means that from here again, if Bank Nifty moves up to this level 52,400, then what we'll do is we will close this 52,200 call and put and initiate a new straddle which is 52,400 call and put. So likewise, based on the up move or on the down move, you will be closing the previous straddle and initiate a new straddle. I'm going to back test for all 5 instruments, Bank Nifty, Fin Nifty, Nifty, Sensex and Mid Cap, Monday to Friday from 2017 to 2024. So if I run this, it will give me the overall results for all days. So we'll compare overall results versus on expiry days. So here's the overall returns, where it has generated almost 10 lakhs of profit with almost 60,000 of drawdown, and this is the overall yearly returns I could see, and this is the overall net returns. So if it generates almost 9.92 lakhs with average profit of around 500 rupees, and this is the overall drawdown ratio, this is the expectancy ratio. So even if we run it on all days, it has generated a decent returns, I would say. So let us apply a slippage of 0.3% and see if we calculate what is the overall returns. So applying it would apply the overall slippages to each of the legs, and it would give us an updated returns. So if I'm running 2 lots in all 5 instruments, And then if I apply slippages of 0.3% and apply the overall intraday brokerages and taxations, this is the overall returns looks like. It almost ends up in negative, because when you trade on all days, most of the charges gets eaten up. Even if I consider trading with 2 lots in all 5 instruments in all days with respect to this rolling straddle bot, it is not a good strategy to run. So let us check how the overall returns would look like if we apply this strategy only on expiry days. So when you run the strategy, like if you have 10 lakhs and you distribute 2 lots in each of these particular baskets on trade on all days, obviously it is ending up in a loss of almost 4 lakhs. Instead of that, if we do it only on expiry days, what happens is you have so much of capital left. Like if you're trading only on Monday, you can trade with all capital with mid cap. If you're trading it with on Nifty on Tuesday, then you can trade the complete 10 lakh with Nifty. Similarly, when you're trading on Wednesday Bank Nifty expiry, you can put all your 10 lots in just Bank Nifty. So you have ample of capital left when you focus only on expiry based trading. So now instead of this 2 lots, let us see what would be the overall returns looks like if we trade with 10 lots in each of the expiry. So now I have applied it only on 0DTE, where we'll be running it only on the respective expiries for each of the index, and we'll be trading with the complete 10 lots. If we see, the returns has changed from negative to positive. It has given almost 35 lakhs of overall profit with just 1.4 lakhs of overall drawdown. And year wise, you could see a consistent returns completely from 2017 to 2024. Even the last year, which 2023, where most of the normal 920 strategy didn't do well, this strategy has given you a very good returns. And if you see the overall profits, it is approximately 36 lakhs of overall profits. That is after slippages, after brokerages, after all the transaction cost. This is the net returns that you would get if you apply this strategy only on expiry days, where with a winning accuracy of more than 65%. So when you run with 10 lots, this is the overall drawdown that you would face. So with respect to Bank Nifty, the maximum drawdown was around 88,000. With respect to Nifty, it is 1.4 lakhs. With Nifty, it is 92,000. With the mid cap, it is 1.2 lakhs. And with respect to Sensex, it is 92,000. This is all for 10 lots. And the overall maximum drawdown, if we combine this and then trade, it is still 1.5 lakhs only. And the overall maximum duration of drawdown is 28 days, and the overall expectancy is almost 3.36. So definitely this strategy, if you wanted to if you are looking for a strategy to apply it on specifically on expiry days, definitely rolling straddle is one good strategy which you can apply it for all 5 indices, and the net returns that you get after all charges is really good. Even this strategy we have completely automated with Square of Bots, where if you wanted to trade the strategy with the completely an automated way without any manual interventions, you can simply go to our site squareofbots.com and try out this particular strategy, which we call it as rolling straddle. If you wish to try the strategy rolling straddle through an automated way, you can try out with our platform squareofbots.com, where if you go to this website and click on login, it will take you to the respective login page, and you just log into any of our brokers using your credential. It will take you to the Square of dashboard, where you can trade this rolling straddle through an automated way. And if you open an account under us through any of these referral accounts, Alice Blue or then you don't need to pay any subscription charges. You get these bots at completely free of cost. So this is what I wanted to convey in this video. I'll see you guys next week with another topic. Bye.